in cable in today's session.
Hello and welcome to Bloomberg Quint. Tata Metaliks reported their third quarter numbers post-market hours yesterday. While the bottom line has been flat for the company, margins have contracted by over 1%. Let's discuss the quarter gone by with Sandeep Kumar, the Managing Director of the company. Hello and welcome to Bloomberg Quint, sir. Hi, this is Nikki. So I'd like to start off with price realization for pig iron and DI pipe business, which was up around 2% sequentially. I'd like to understand how about the percent number on year-on-year basis.
Yeah, hi. Thank you for the call. The margins in quarter three have been under pressure only towards the end of the quarter. Otherwise, I think most of the cost increase of coke, if you look at the coke cost increase and if you look at, compared to quarter three of FY18, there was a 17% increase in coke prices. And we were able to pass this on, and about 23% increase in pig iron prices we could achieve. And as far as the pipe business is concerned, there was an increase of almost 8%. So I don't think the prices were a problem. I think the real issue for us in this quarter was the cost push because of the furnaces not behaving well. And both the furnaces we had to take shutdowns to get them back into action, into much better improved coke rates. So that was the major issue, which also resulted in lower production. And but we were able to compensate this with record sales of ductile iron pipes at about 66,000 tons, which is the highest quarterly sales ever for us. And that gives us a lot of optimism going forward. But the pig iron business was a drag in quarter three, though the furnaces have been repaired and things are back to normal. How the markets would behave in pig iron would be a bit of a challenge as we go forward on the pig iron side.
Sure, that precisely was my next question in that case. I would like to understand the cost pressure relating to typically your pig iron division, because that's where the decline is coming from. Do you see the coke prices escalating going forward, or what are the price trending right now? Your sense on price direction right now?
So the steel raw material prices have started coming down, from say December onwards. And that will put pressure on the pig iron prices. So already we are seeing some reduction in pig iron prices. Say, for example, if you look at coke prices domestically in India have come down by over 2,000 to 3,000 rupees per ton, while the pig iron prices would have come down by more like 1,500 or so. But as far as the pipe business is concerned, that's more stable. That's more over 3 to 6 months or even 9 months period. So there we don't see much of a problem, and we have a robust order pipeline, good booking. So quarter four is normally the best quarter for the projects, because the projects have to get completed within the financial year. So the fund flow is also much stronger. Therefore, quarter four seems to be coming up as a good quarter traditionally for the industry. And I don't think there should be any exception for Tata Metaliks. But the concern would be somewhat on pig iron, where there would be some uncertainty on how the steel raw material prices would behave.
All right, Mr. Kumar, since you're saying that the quarter four is expected to be a good one for the company, is the company now looking to a figure more than 14% in terms of their margins for quarter four, or can we expect a figure more than 20-25%? What's the kind of margin outlook would you give out for your next quarter, given that you expect it to be the best one for the company?
See, we don't give normally a guidance on for a margin or the volumes, but I think suffice it to say that the margins should improve going forward, because the cost has been the cost factor which led us down in the pig iron business in quarter three is behind us, and quarter four traditionally is a good quarter. So I think we should have a better improved margin as well as volumes. So we are looking very optimistically at quarter four. How much it would be, I think we'll get to know in April.
All right. I'd like to understand a little bit about the oxygen plant that the company has been setting up for its blast furnace on a BOO basis. I'd like to understand what's the progress on this, and when is it expected to be commissioned by?
The oxygen plant is supposed to be commissioned in quarter one of next financial year, so FY20, so the April-June quarter. It's very much on track. The construction is on. and that should not be any issue on that. But the benefits of that will start coming in from later in Q1 of FY20. Nothing of that should come in FY19. But what benefit we should get marginally in FY19 Q4 would be from the PCI, the coal injection plant, which has been installed and commissioning is in progress. And I think in January we should stabilize that as well. So going forward into February and March, there should be some benefits which should start coming in from there.
Sure, sir. We'd like to know a little bit about your brownfield expansion, given that the company was working on some on obtaining some kind of environmental clearance for the same. Where are we headed with regards to that?
So the environment clearance part is has been more or less at Ministry of Environment and Forests. The work has almost complete, with the expert appraisal committee having recommended our application. So we are expecting the environment clearance shortly, as soon as the file is cleared, which is a procedural issue rather than any technical. And thereafter, I think there is a consent to establish, which comes in from the State Pollution Control Board. So I think in the next couple of months that should also be in place. But so we will be ready from a statutory angle, and as soon as we decide on whether we want to go for a brownfield or some other option, then we will take that call of actual work, but depending on our board approvals.
All right, sir. The last question in that case, I'd like to understand a little bit about the company's order book position right now, and if at all the company is looking at new inflows coming in this particular quarter. Any huge order in pipeline that the company would like to update us about?
So our DI pipe business, which is on long-term basis, is, typically 6 months or even 9 months. That's the order pipeline is quite healthy. We have order bookings of almost about 9 months or so, and as we step into next year, we find a very a huge order pipeline coming in from Andhra Pradesh, but it will go to the industry in general, and Tata Metaliks will also benefit from that. But I think that so there is a huge amount of new orders coming in from Andhra. Also, there are some other states like Maharashtra, Haryana, Odisha, where also new orders are flowing in. So all in all, I think it looks very positive for the DI pipe industry in general, and for us more specifically.
All right, Mr. Kumar, that's all that we have for you today in that case. Thank you. It was indeed a pleasure talking to you.
Thank you very much.